All right. Hey, everybody. Hello. How are you? How do you do? Let's make sure all systems are a go. Here we go. Turn my mic up a little bit. Okay. Hey, everybody. Hi. And welcome to Tuesday Tip at 2. I'm live today, this week. I am live. Haven't had a Tuesday Tip at 2 in a couple of weeks. And I wanted to hop on and have a Tuesday. Well, I wanted to come on because I haven't done a live this week yet. And also, I hadn't done a Tuesday Tip at 2. So I said, hey, put them together. Just do a live Tuesday Tip at 2. And let's go for it. All right. So today I want to talk about, all right, today's topic is Philadelphia's housing market. Is Philadelphia's housing market oversaturated in 2025? And what does that mean? Not just for buyers and sellers, but also for investors. And so I really want to talk about this. You know, I love to bring you guys pertinent information, let you know what's going on. Of course, I'm Daniel J. Mitchell, PA licensed realtor. I service Philadelphia and the surrounding suburbs. Let's talk about real quick what's going on today in my neck of the woods. Thankfully, my duplex listing in West Philly. So I have firsthand information and knowledge on what this market is doing to investors, to those who are in the Philly market. My duplex listing is under contract. Thankfully, after some serious marketing and all that good stuff, we got an offer in, and it was a solid offer. So, of course, we accepted after being on the market over 60 days. And so it's great. I'm happy for my seller, and we always have prayer emoji hands, fingers crossed emoji hands to get to closing day. And so I'm excited for that. Other thing is I'm also under contract with my buyer for $1 million listing. Whoop, whoop. In Rydell, PA. Excited for that. That's right around the Jenkintown area, Abington Township area. Super excited about that. Whoop, whoop, whoop. You know, drop your bombs and, you know, clues bombs or whatever. Drop all the stuff, all the sound effects. So excited about that. So when I say I service the Philly and the surrounding suburbs, that is exactly what I mean. All right. I am a Philly girl, but understand that I service different areas. So I have a good wide range of understanding of different markets and things of that nature. So I want to focus on Philly today, right? So I was talking with some colleagues and things of that nature about Philly market, what's going on over there. And it was just a great conversation. Of course, talking to different investors and investor groups, having a conversation about what to do, how to pivot. So I'm going to cover all bases. I want to talk about buyers. I want to talk about sellers, how it affects buyers, sellers, as well as investors. What does the Philly market look like for you? Let's go. Let's talk about it. One of the things I want to mention is that we all heard in the headlines 9 times out of 10 about how the Mayor Cheryl Parker, her initiative is a proposed $2 billion plan, which aims to address the affordable housing crisis by launching new programs, offering tax incentives and converting city-owned properties into housing units. There also another ongoing issue in Philly are land banks. So the city owns this land and they aren't readily releasing it all the time. If they do release it to people to buy, it takes quite some time to actually get it into their ownership and or possession, right? And so these are just some things that locally that are going on in the city of Philadelphia. And so her proposed plan sounds fantastic. That is the hope. And we'll see what happens. But let's talk about this oversaturated Philadelphia. That's what's scary. So I know many of my investor friends were like, wait, but we have a 6-month supply of housing already, right? And 6 months, give or take. Now Philly is a major city, is a good size, and so depending on what pockets you're in, it's very much feeling like a buyer's market. So let's talk about that for buyers and sellers. Let's go through this. What are the implications for us stakeholders, including investors? For buyers and sellers, buyers now have more inventory to choose from, which increases the negotiation leverage, especially in overbuilt neighborhood. Sellers may face longer days on the market and increased price competition, particularly in pockets like Northern Liberties or Point Breeze, and also West Philly. For renters, excuse me, for renters might start to see prices softening in some areas with so many new units opening up for rentals, right? Whether they're private, whether they are, apartment complexes, you may start to see some of this ease up, especially in higher end buildings and new construction apartments. All right. So you're definitely, and I'm already seeing it, more incentives for these newer buildings, for these high end buildings. It's definitely more incentives. Even many of them have now, started, marketing and catering to Section 8 people, those who get vouchers, because for them, they're able to recoup actually more funds and above market pricing, because that is affiliate incentives with PHA housing, is that what they offer landlords is above market pricing. Okay. And so what will have cost maybe $1,100, depending on what zip code you're in, maybe $1,100 in that market, they may be giving you $1,900 for that particular unit. Okay. So those incentives, people, investors want their money. If they can get more money, that's always great for them. So many of them are either softening on pricing and or offering incentives like, if you come in, we'll drop off a month, we'll put you on a payment plan, which also is something that is being proposed in Philly as well. Something that's being proposed in Philly is, instead of, the traditional 3 months rent, they are proposing, I believe they want it to be 2 months, and also the option for payment plan for that. And you see complexes already doing that, where they're offering payment plans for your security. Because guess what? If you're in an apartment complex, if you're in an apartment complex and you have, it's a nice apartment complex, it's luxury, and at the end of the day, these housing market prices are they're high. And that's why I tell a lot of people, I'm like, well, you might as well buy, right? If you have $5,000-$6,000 to be able to give over to your security deposit, first month, last month's rent, then you might as well, be in the market to buy, right? And put that market into some equity, into some home ownership. But however, everybody's situation is different. So when you're going into these properties, they are incentivizing you by saying, hey, we'll drop off last month, first month with rent. Will also offer you some payment plans and all those things. All right. So for investors, how about, let me talk to y'all. Okay. Let me talk to the investors, because this part is so critical. We are seeing a clear shift in strategy requirements, right? The old model of buy it, rehab it, list it, sell it fast, aka classic flip, is a struggle. All right. It's a struggle in many parts of Philadelphia. Right. And so, flipping versus buy and hold, this 2025 strategy shift that we must have is that, understand that why flips are getting riskier in 2025. Okay. Tariffs. That's one thing, right? Oversupply means more competition when you list, right? So especially if your product isn't significantly differentiated. All right. So if you're doing the same, everybody has gotten the same model, right? And they're like, hey, we're going to do it. You may do some things slightly different. You may have your product, your units, your property look slightly different, but everybody has taken a very similar model and started applying it, which is fantastic. There's nothing wrong with it. But we understand that there are things called waves, right? And many pockets of Philly, the wave for applying that strategy, that model, is definitely coming. It peaked and is definitely coming on a down downturn, downspin, downspout, whatever you want to call it. Okay. Buyers are cautious, especially with interest rates stabilizing, but still not low, right? Tariffs. Listen, the stock market, it's a lot of stuff going on. All right. And so people are cautious, buyers are cautious, sellers are cautious, investors are cautious. It's a lot going on. And so when you're talking about, as an investor, trying to produce flips and all these different things, these are all the things you have to consider. Appraisals are tighter, comps are a bit unpredictable, and longer days on the market eats into your ROI, or return on investment. All right. Again, firsthand experience. When I got the listing for West Philly duplex, beautiful. It looks great, right? Here are the comps. The comps support this number, right? But at the end of the day, the market tells you. The market tells you what the price of something is. The market tells you what you'll be able to get from it, right? And you can have the best product out there, but depending again on what pocket you in, and that's why Philly is so unique. Like many areas, but especially Philly, certain pockets, that were on that up curve and all that stuff have kind of leveled out and dipped a bit, right? So when buy and hold is becoming more attractive, demand for affordable rentals is strong, especially in working class neighborhoods. With the right financing, you can still cash flow even in a high interest rate environment, especially if you're creative with rehab and hold costs. There's increasing city support, like I said before, for long-term landlords providing affordable and workforce housing. In regards to what I just touched on earlier with Mayor Parker's plan for affordable housing. So if you're an investor, many are leaning more into that. Now, it can be a bit of a catch-22. So if you're doing I'm going to do the PHA Section 8 vouchers, right? And I'm accepting those people to go ahead and be in my units, and I'm able to give above market, which is fantastic. That's fine. But if you're one who is doing more flips, then you have to be very conservative with your ROI. You can't, you're not getting the market rate like you would have if you're getting a property from the city. So the property does have programs where they will give you land or they'll give you properties, right? And you have to build and make something for it to be sold with affordable housing, but you're not getting the above market rate. You're getting the rate that they tell you that, you can sell it for, right? Because they want to make it affordable housing, right? And so the struggle there is depending on the area, depending on the block, depending on the oversaturation. Those are other things that you have to consider as far as risk, right? Here's a pro tip. Focus on areas with strong rental demand, but lower supply, or emerging neighborhoods where you can get in before the next price wave. All right. I'm your realtor. I can help you figure out what's a better area. What's the absorption rate? Okay. Figure out those kinds of things. And so I want to touch on backtrack to, again, buyers. For you in Philly and many pockets, you have more inventory to choose from. So what does that mean for you? Again, backtracking, the negotiation is there, right? I'm not saying now that you go, I'm gonna get a house for $20,000 less. No. But the negotiation for maybe coming down a little bit on the price, or at the very least being able to negotiate seller's assist, is there. I always tell, no matter what market we're in, right? If there is a house that has been sitting on the market, you can have a conversation, right? If it's been sitting on the market for 7 days, particularly the higher, the longer, 7, 14, 30, 60, that's when you can start having, it opens the door for more conversation and negotiation, right? Because, some people are not in a rush to sell their property, and that's fine, but most people are. Some people are not in a rush. They're just like, nope, I'm going to get the price that I want to get. And if I don't get it now, I'll get it later. That's fine. But for most people, they want to be able to sell their property, right? And these are things that you have to consider. So this market, rewards savvy investors who are in it for definitely the long game. And we need to be less hype about the quick cash and about what's more sustainable cash flow, community reinvestment, and building equity over time. Okay, that's definitely the big thing that you want to consider in regards to that. Okay. Listen, I want to open the floor for any questions. Feel free to ask me about any specific neighborhoods, even if you don't have it right now, investment opportunity, other real estate concerns that you may have. Okay. Just let me know. Another thing I want to talk about real quick, Northern Liberties, certain areas are experiencing more impact than others. So like Northern Liberties accounted for 24% of all new units citywide in 2024, leading to an increased vacancy rates. Art Museum, South Philly, Navy Yard expected to see significant new deliveries in 2025. Okay, so this year with 873 and 860 units respectively. All right. Here are some indicators of oversaturation. I want to say this real quick. Declining occupancy rates, okay? Slowdown in new construction and stabilizing home prices. All right. While home prices continue to rise, the growth rate has slowed to 5.1% year over year as of January 2025. Okay. So it has slowed down a little bit. Not terribly, but it's definitely slowed down. So those are some things I wanted to throw out there. If you are, whether you're watching live or you're watching this replay, I need you to go ahead and have any comments, any questions, anything of the sort, go ahead, put it in the comments. I do try to watch my comments and things regularly. So if I don't get back to you immediately, just look for my response because I do get back to people as soon as I typically see them. With usually within an hour or two. I try to comment and I tag the person. Okay, so those are the things that's going on in this neck of the woods. I hope that was helpful to you. If it was, again, tag me, share a comment, drop an emoji, do all the things. And that's pretty much all I have today for today's and this week's Tuesday tip at 2 live. We live today. All right. If anybody is looking to buy, to invest, to do anything, don't be scared. Don't be leery. It's just about strategizing. It's just about pivoting. Send them this video. Send them my contact information. book.djmrealtyco.com. Again, book.djmrealtyco.com. All right. Bye.